Hi, my name's Ben Carter, Director of Carter's Tax Advisory. As you may be aware, October month is Small Business Month. And what I want to do for you today is run you through some business structures to help you with your new business or help you decide whether your existing business is in the right business structure. So today I'm going to go through 4 key structures: sole trader, partnership, company, and then 2 versions of a trust. So we'll start off today with the sole trader. Your sole trader business simply is an ABN in your personal name. It costs very little to set up. The potential of any risk minimization, tax savings, or even longevity is somewhat limited under your sole trader, but it's often a good entry level for those that are trying to save costs where they can, where they're entering the market and possibly doing a very micro business. So we'll move on to partnerships. Partnerships are really just 2 sole traders merged into a new ABN. Doesn't yield a great deal of tax benefit or asset protection. It's a commonly used structure in the sense of perhaps a mum and dad's small business that are both actively involved, that likely share the profits. It can also be used by 2 other individuals merging together under the same business that would also like to merge the profits. Partnerships are generally arranged under a partnership agreement, which can be customized depending on the 2 partners or more partners involved. This can be customized to different profit share, asset ownership, and further complexities to that. The next structure I want to talk about is the most commonly used. It's a company. A company is a separate legal entity from you personally. Okay, a company comes with a great deal of asset protection. It comes with tax concessions and also comes with different roles that you as the business owner and decision maker need to align those roles to your company. Now, the 2 main roles are your directors and your shareholders. Now, your directors are appointed to take control, absorb some risk, and should be, generally speaking, the people that are running the day-to-day activities in the business. The shareholders are simply the owners of the company. So if we're looking from a micro business perspective, usually it's the same directors and shareholders. However, if you're looking or entering into that small to medium business range, you might have different equity holders that either stake or lend money to help you start off and run the business, or you might have multiple people that are in joint control or shared control, that we may have multiple directors. Now, one of the complexities around the company, again, is this separate legal entity point. You've got to imagine that you've just created a new business that is not yourself. So it can run independently of you. It can sign contracts. It can enter lease agreements. It will open up a bank account. It runs a separate ABN, a separate tax file number. So again, it's quite independent of you. And you as the business owner are protected by what's called a corporate veil, which is an invisible layer protecting or overwrapping the company from yourself personally. So what that means is that if there's any risk ascertained in the company, if it's subject to possibly some lawsuits or anything that a negative event that has impacted the company, you as the director or the business owner could be protected from that in those types of events. And it's really important to note. Now, there are certain events that corporate veil may be lifted, but again, generally speaking, if it's a day-to-day business event that has triggered that risk or that negative impact, you can be protected from that. And what does that mean for you? It means your personal assets are likely to be protected in that event. So when we look at, again, your business and starting up, you're looking around what type of activity you're going to do. You're looking to see the risk profile of that activity, and then you're looking to your personal affairs and personal life. The company does cost more to set up than your basic sole trader and partnership, but again, with that asset protection and tax concessions, it may be a better option for you. When we come in to set up the company, there's a lot to go through. Again, there's roles I've pointed out, your directors and shareholders. There's also discussions around what's called the company constitution. The company constitution is basically the rules and regulations of the company. It's going to show you what you can and can't do. The constitution can be customized to your own liking. We can add different classes of shares, different voting rights, things like that. So it's important when we set up the company to really come in, have a very detailed meeting. Let us learn a lot about your business, a lot about your plans, and so we can customize that full setup to what you need. The fourth business structure I want to talk to you about today is your trusts. So the most commonly used trusts are your discretionary trust and your unit trusts. So your discretionary trusts are also commonly named your family trust, which you may have heard about. Same sort of concept. Discretionary just simply means that it gives the ability to split the profit to multiple beneficiaries. Your fixed unit trust just simply means that we've got fixed unit holders and fixed beneficiaries. So the overall structure for a trust is you've got two main roles. You've got your trustee, which is kind of like your director, right? It's got the control, absorb some risks. Then you've got your beneficiaries, which are like your shareholders. They're your sort of ownership interest, your profit share availability, little or no at all risk to the company. They simply hold the benefit. So when we look to allocate those roles, again, we want to complement yourself, your business, or anyone else involved in that to those two roles. Now, to add some complexity to that structure is you've got an ability to add a corporate person or entity as that trustee. So what that means is that you don't individually have to absorb that risk. You can allocate that risk to a company. Now in the company, again, you've got your directors, shareholders, but you've got your separate legal entity concept. So you've looked at it holistically, what you've got is you've got your trust, which you as a director control the trustee, but you also have that separate legal entity concept from you and the trustee that if the trust was ever subject to any negative events, you as an individual may be protected from those events. Okay, so they're the two main roles in the trust. So what we tend to do is we bring you in, we learn a bit about you, we learn a bit about your business, about its performance, about its risk, and then align that business to the most appropriate structure based on what we think would be best for you. Once we've aligned you to a structure, we will help you set it up. We'll help you choose a name. We'll help you with any software involved to link the business. We'll even guide you to help you to set up your new bank account, your trading names, even your business cards if you need help. So from start to finish, we will guide you. What we've included today to complement what we've gone through is a fact sheet that you can see attached on our website. And if you look at that and you have any questions or you'd like some guidance or you're ready to start your business and you want to know a bit more, please give us a call. Happy to help.